Okay, people, welcome to Trading Psychology 101. Actually, not sure what I'm going to title this video, but obviously it's the main core content psychology video. The other core content is going to have two versions of most videos, like basic and advanced. This is going to be just a one take. The whole shebang is going to be in this one video, so it's going to be a little longer. I expect this to maybe be longer than the other videos. But we have a lot to talk about because trading psychology is a real issue, and a lot of traders, or if not all traders, struggle with at least one of or more of these bigger points and all of the subcategory points that I have listed. So we're just going to go through this in no particular order because I think that all of these are really important points to touch on today. Actually, I'm just going to go ahead and expand this out real quick. That way it's not any sort of distraction at all. Why did it do that? Okay, bring it over here, right in the middle. So right off the bat, you can read this on the screen. Hopefully you're listening to what I was saying instead of just reading it, but lying to yourself and others about your gambling addiction. So not trying to take shots at anybody. When I call it a gambling addiction, I say that from a perspective of experience, right? I've been guilty. Just this is a disclaimer. I'm not going to get this. I'm not going to go into this for every single point. I'm just going to say as an overall disclaimer, I have personally been guilty of every single one of these greater bullet points. And a lot of these quotations came from somewhere in my head from the past me. So I'm speaking from experience. I'm not speaking down on you. I don't look down on you, and I want things to get better for you. I want to be a helping hand. So just know that you are in a safe environment, and I'm not some giga chad that's like, gonna hop out of here and, get in my Bentley and laugh at laugh at people with less money than me or who aren't profitable or whatever. Like, I know I've been the, played the asshole role online before, for multiple reasons, depending on the mood that I was in that day, or because I was trying to do marketing in that way and realized, maybe sometimes it works, sometimes it doesn't. But really, I do understand, and I am here to help. So just listen in, lock in, and maybe if you don't normally do this, try to just breathe and be in the present moment. Turn off all other distractions. So if you've got your phone next to you or notifications on your phone and you're watching this on your phone, go ahead and put it on Do Not Disturb. Turn the TV off, turn the video game off. Don't put this in the background. Just be mindful in this moment and focus on this here with me. And I promise you that it will change your life if you apply everything that I'm talking about here. Because for me personally, getting my trading psychology right didn't just fix my executions. It helped me see more clearly what model I needed to be using to be profitable, based on my own personality. So getting right into it, once again, let's go with point number one. And these are, again, in no particular order. I'm just going to go on a list that I wrote at random. So point number one is lying to yourself and others about your gambling addiction. And I have made these excuses, and I have heard these excuses so many times. In my original mentorship in Safe Place, I had, I believe, over 500 students in total come through there. If you count free students that I mentored before or after I did the premium subscription system, it might even be closer to 700. I had people come through there for trials and things like that. So I had a lot of people through there, and I have heard everything. I mean, if I wrote all the excuses, like, this would just be, all the way down off the screen. So I've heard it all before. I've said it all before for the most part. I'm just for testing. That's one of them that I touched on Twitter today. This is a gambling addict mindset. So, you're going in, basically what this means is you're saying that you're buying the prop firm account and that you're learning a new strategy and you think that you're on to something and you don't know if it works yet, but you've seen some pretty interesting, intriguing results on like sniper entries for, big moves or whatever, and you want to secretly get lucky. And if you are wrong and you fail, you want to dissociate from that failure because you want to believe in yourself. It's a really cool trait that humans have in our brains, that we actually preemptively will make excuses for ourselves because no one wants to believe that they're a failure or that they're not succeeding or that they're falling behind. No one wants to believe that because if they believe that, then they have to overcome that fear with some sort of matched success and be able to tell themselves like, no, I am going to come back from this, or I am a good trader, I can be profitable, right? So if you tell yourself, oh, it's just for testing, it's whatever, it's no big deal if I blow this account, I'm just trying to learn. That's a great way to tell yourself that everything's going to be okay even if you fail. And the truth is, yeah, everything will still be okay, but it won't be okay if you keep on doing that over and over and over again and blow your entire bank account on prop firm challenges. And getting lucky is going to stop your learning, because if you tell yourself you're forward testing and you're wanting to watch what price does based on certain setups, you're going to be paying much more attention to that P&L. If you're right, you're going to be paying much more attention to that P&L going up and telling your friends about how you passed the account. And if you're wrong, you're not going to be thinking about the lesson that you learned. You're going to be thinking, oh, scrap this, let's go to the next strategy. I don't care to use this if it takes a single loss. Or you won't be thinking, did I do it right or wrong? You'll just be thinking, oh my God, I just blew another $50. How am I going to explain that to my wife or roommate or girlfriend or husband or boyfriend or kids or just even myself, right? My mom, dad, whoever it is. So the next one, I accidentally left a position open. No, you didn't. I know you didn't. I know that your daughter didn't take your phone and take some magical execution on TradingView. Open your locked phone, log on to TradingView, and hit buy or sell. I know that your cat didn't step on your keyboard in the middle of the night. I know that you didn't forget that you left a position on because you're a gambling addict. A gambling addict does nothing but look at the charts. They would never forget that there was a position on. I've made this excuse many times. I've probably made this excuse over 10 times. There was only one single time that it was true. And I think it was for a win. So, no, you didn't. You're lying. Stop lying to me. Stop lying to everybody. The cat ate my homework. Dog ate my homework. Bullshit. It's not going to help you. You're never going to get better telling yourself that or telling other people that. Everyone agrees to like this. There's this unspoken, unwritten agreement, unspoken agreement, subliminal agreement between all of us in the trading space, where we all just pretend like we believe each other because we like to be able to use that as an excuse. But it's not true. We're all okay with telling ourselves, yeah, we believe that person. We're not calling them out because we use the same excuse. It's not true. Stop using it. It's silly. My favorite, this account is a throwaway. I have used that one a lot in the past. Your account's already in drawdown. You switched to another prop firm. So you went to a different casino and, you're like, well, I'm not even using this one anymore, so I just might as well full port it or whatever it is. You're just going to come back to that prop firm next month. You're not really leaving that prop firm. You're just telling yourself that. because you want to feel better about the loss, about if you fail, right? And what it's going to do for you in turn is your success is not going to be your success. If you do win, if you do get lucky, you're going to have imposter syndrome, and you're not going to be able to continue that success. Because if you have an excuse for your failure, then that excuse turns into a reason for your success, right? So this account is not a throwaway. Every single thing that you're doing when it comes to spending money, you need to be taking seriously in this market. All right, let's go to the next point. Okay, next point is allowing the market to change your trading plan. So this is both broad and intraday. There's going to be another point on the broad spectrum of that, of like allowing the market to change your entire trading plan, like your strategy that you're relying on or going to over a short period of time, like a week. We'll talk about that later. This is more on the intraday when you're in the middle of trading and you start to tell yourself these things. I don't want to miss the move. I'll just flip positions and double my size. If my setup is wrong, I could lose money. So we have lots of fears of missing out. We have lots of doubt here. But the main thing, the main focus of all of these struggles is what it's causing you to do, which is to change your trading plan. So if I have a plan that I'm going to be looking for price to come below level X and give this specific trading model, and then if it does that entry model, I'm going to hop in longs and I'm going to take it to the top, right? Or halfway to the top, whatever it might be. And this very generic trading plan. Obviously, it's not that simple, but if you have a plan and you are letting the market change your plan, so for instance, you believe that the market is going to go up based on your trading plan, and you start to see some sort of downtrend, and it convinces you in the moment that maybe your idea might not play out, your trading plan is going to change in that moment. And if you don't have your psychology locked in, and you'll end up doing things like just completely forgetting that you had the idea to go long with the specific entry model in the first place, and now you're seeing the short side of the market when you're not supposed to be. And things change because you didn't want to follow your plan, or for instance, you're waiting for a certain confirmation, you don't get it, so you tell yourself, "Oh, I'm just going to hop in. I don't want to miss the move," and it continues to dump down through you. Another thing is flipping positions. You think that you see something on the lower time frame that says some sort of invalidation for your higher time frame trading model, and you are paying way too much attention to every single move in the market, every single candlestick, and you decide to change positions if you let's say you moved your stop loss up too high, or you got in too early before confirmation, and you try to switch your position against your trading plan and double your size to make back your loss. That's also allowing the market to change your trading plan. You shouldn't be doing that. And then obviously, if the market is doing some scary behavior like inducement or high volatility, you might get shaken out of the conviction of taking your trade setup that you thought of ahead of time. So the market actually provides your trading plan, and you are waiting patiently for it, and you see it and you can't pull the trigger. And you can't pull the trigger because you're afraid to lose money. I'm here to tell you, even if your setup is right, you can still lose money. You can get stopped out. You can click the wrong button, right? You can click sell instead of buy. You can, put on the wrong contract size, put on mini instead of a micro, or vice versa, and then whoops, try to cancel it out and get into the right position. Now it's too far, or whatever it is, right? Like your setup could be right, or you could be right, your setup could be correct, and you take the trade and it loses, or vice versa, your setup could be wrong, you take the trade and it wins, right? That shouldn't affect your long-term performance psychologically on how you are executing. You have to understand that the risk of pressing buy when your trade setup comes for your long, or pressing short or sell when your trade setup for your short comes along, it's equally as risky. Equally as risky as if you traded in the opposite direction right then and there. Equally as risky as if you did any other sort of trade pattern or model. You're putting money on the table, right? And you control how much money you're putting on the table right there. And that's all you're in control of, okay? So stop trying to tell yourself that you're just waiting for a more perfect setup, because these setups, they're not perfect. Even when they feel so perfect, it's like in hindsight, I can get on here and talk about how perfectly, this 250 point short set up for me, but really, like, it didn't make any sense in the moment. I didn't know if it was going to win. I calculated how much my risk was based on my stop loss, and I said, this is my setup. I hope it wins. And it did, right? And sometimes it doesn't. Even when I read it correctly, even when I read the market correctly according to structure, correctly according to my trading plan, I can still lose. So you got to stop letting the market change your trading plan and just execute based on that plan. Okay, getting shaken out of your bias by inducement. This is similar to the previous point, a little bit different. So this is not if it's changing your trading plan and the way that you're going to execute, but this is if you get in and you are convinced and sold and convicted, and you buy and you're expecting it to go long, or you sell and you're expecting to go short, and then you let yourself get out because of what's going on in the market after. So once you get in, you should have basically a plan of three things, in my opinion. One is going to be where you're going to take profit. Two is going to be where you are going to stop yourself out if the trade doesn't work at all. So your point of invalidation, your initial point of invalidation. And three is a plan for what a secondary point of invalidation is. So that would be where you stop yourself out in profit, or in a lower risk loss. So for instance, if you tell yourself that you're going to trail your stop loss behind every two swings behind. Every time that a swing goes up, you're following two swings behind, and then you move it one swing behind and you get stopped out and rated, and then it flips back up. Then there you go. You missed out on an opportunity because you didn't follow your plan. You got out because the inducement forced you out because you didn't stick to your plan. Or for instance, with all this consolidation, I'm supposed to have a... Hang on, my OCD is getting me. With all this consolidation, I think we actually go lower first. So you get in for your long, and it starts to take too much time, and it's consolidating, right? And it doesn't deliver immediately. And so you tell yourself, you know what? I can't sit in this drawdown, or I can't sit in this minor profit or a break even. I'm scared. I don't have peace with the potential of losing. And so I really need to get out and wait for it to go lower. Really, you're just saying, you can't handle it. You can't hang in this because it's too much to handle. And that's okay. That's where you're at right now. But you have to understand that you're telling yourself lies when you say those things. You're speaking from a place of fear rather than a place of technical analysis. This thing looks primed for a pump. Just look at these 5-second swings, bro. So you're in a short position, and it's based off the 15-minute or the 5-minute or the 1-minute, whatever, and you're just watching, and you just, for some reason, based on no technical analysis, that you've ever learned about. You're seeing, you're looking at the 5 second, the 15 second, the 1 minute, whatever it is, right? And you're seeing these large swings and volatility increase and everything, right? And it looks like it's easier when price is moving up, it glides up, and then when it's going down, it kind of steps down, and you tell yourself like, oh, it's not going to work, and so you get out, right? And then you miss out, or you dodged a bullet. But either way, I don't think it's a good idea to get shaken out of your bias because of that inducement. And I'll just get back in if it gives a second confirmation. Most of the time, no, you won't. And if you do, your entry is worse. You're going to size up less. You're going to make less on the trade. You're probably going to hold it past your original take profit because of greed. And if you hold it past your original take profit, there's a higher likelihood of it turning around on you. If you have a decent trading strategy, take profit strategy, there's a higher probability of it turning around on you. So then you just end up actually losing the same amount. You don't take profit where you could have won the trade. You lost just as much money on half the contracts because you got in higher for your long instead of lower on your original confirmation. And you are just completely kicking yourself and kicking rocks now. So don't let yourself get shaken out of your bias by inducement. Set up a plan ahead of time for how you're going to trail that stop loss, how you're going to cut your risk down, and get confirmations as price continues. And if you get those confirmations, you can move your stop loss there. And if you don't, then just sit and wait and follow your plan. It's as simple as that. Okay, this one's really tough. It's actually one that I feel like I just got over the hurdle of. I've conquered it temporarily numerous times, but I think I'm finally in the clear on this, just because I started to realize that the more I tell myself this lie or excuse, the worse off I am long term. So refusing to accept that your bias was wrong. That's a tough one, because to accept that your bias was wrong is to accept that in the future you might take a trade thinking you're right and lose money. And that's a terrifying thought. Until you learn that long term, your winners will overcome those losers. And that's only going to come from consistency and good psychology. But right now, that's not where you're at. That's why you're watching this video. So I was wrong about my original stop loss. That's a lie. That you could tell yourself, you can be right if you read the market incorrectly, if you're still reading the market incorrectly. As far as structure goes, if you have like a structure-based strategy and you thought that this was a protected low and it wasn't, you should not be trading with money anyways. If you don't have perfect execution, or you don't see structure and candlestick structure absolutely perfectly 100% of the time. I'm not talking about your executions and getting it right. I'm talking about seeing structure perfectly every time. Or let's say you use order blocks or fair value gaps, and sometimes, I thought this was a fair value gap, but it actually wasn't. Like, there's a wick here and I didn't think there was. Or this is not an order block, I thought it closed above this candle. Like, you shouldn't be trading with money until all of those little mistakes are gone. So if you're saying I was wrong about my original stop loss, that's because you either just woke up in the morning and read the market, read your setup incorrectly, read the technicals incorrectly. You should probably focus on taking some time to wake up and lock in, rather than just hopping right into it. Or you're lying to yourself and you're telling yourself your stop loss was wrong because you still believe in the idea, even though it's become invalidated. The other lie, I'm going to catch the top and make it all back. So in this instance, you've been trying to short and you can't catch a break. The market is just pumping up through you with no remorse, and every little time that you feel like the intuition is kicking in and the stars are just aligning for some reason in your head, you think that you're going to catch the top and you short off of a wick, and then you get cooked. So you refuse to accept that your short bias was wrong, for one, and you want to keep on just trying to short. Or two, you refuse to accept that your bias of price coming under your entry level on a long isn't going to happen, and you're trying to short and force the market back down into there. and that's just going to get you cooked 9 times out of 10 as well. And then the last one, this makes no sense, I need a new trading strategy. That's related to another point that I'm going to make later on in this video. But yeah, this is something that a lot of you and myself included have told ourselves for a long time. That's one of the big points on strategy hopping, and why people strategy hop is because if you if you have a bias that is based on a certain model that you've learned, that you've put a lot of time into, and then it's incorrect, it's frustrating. It's like, this doesn't make any sense, I need a new trading strategy. But that's not the case. If you have back tested and forward tested and seen that long term it's profitable, then you don't need to be worried about your bias being wrong today, because overall your bias is going to be more correct than incorrect, and that will make you profitable long term. Okay, next point is using way too much leverage. This is the obvious one. This is what a lot of people talk about when they're discussing trading psychology, especially in the prop firm space. This happens a lot, probably every day to a good bit of you. Some of the lies that you tell yourselves, and that I've told myself: I need to make back my loss from this morning. Maybe you were up early or up late last night, or trading the market open, and you were taking lower probability setups because, hey, it's only a 5-point risk during Asia, right? Well, apparently it was more than a 5-point risk, because you lost 6 times in a row. Now it's a 35, 40, 50 point, right? Because it's not just 5 points every time. It gets a little bit worse every time. So you're really losing more and more and more. And then, oops, now I've got to make all of it back this morning. So I have a trade set up that I think is slightly quality. It's not A+, but it's good enough. I'm going to go ahead and throw on 5 minis and hope that I make all of it back. That is the wrong way to go about this game, okay? So first of all, you don't need to be trading on those lower probability time frames or time zones anymore, right? Sessions. So if Asia doesn't work for your session, don't be trading Asia. If London doesn't work for your session, don't be trading London. If New York doesn't work, don't be trading New York. Step 1. Step 2, if you take a loss at night, you got to consider, or early in the morning, right, or at market open, you have to consider that loss as a real loss. You can't tell yourself that it was a fluke, that it shouldn't be there. That's dissociation, that's denial. The reason that you're telling yourself you need to make that loss back is because you believe it's an unjustified loss. And it is justified. It's a real loss that you incurred, and it's okay to just sit in that and look at a red P&L for the day if your setup doesn't come, or take a trade and not make all of your money back. Maybe get break even. Maybe you only get up by $50. Maybe you end up on the day negative $100 or whatever it is, right? You don't have to force the market to give back to you what it doesn't owe you. Another lie, it's a prop firm anyways, so the RR is infinite. You're thinking that you put $50 into this account, and the risk reward, if you won this trade and you were right and it goes for 20 points and you have 10 contracts on there, you're going to make, what is that, $4,000, right? 20 points, 10 contracts, $4,000. Yeah. I've been there, right? You tell yourself, like, how many times do I have to do this before I get it right? The problem is that you're not going to follow that system and repeat it on routine until it finally hits. And even if you do, there's consistency rules now, right? So you're telling yourself that it's a prop firm, and you've told yourself that lie 100 times, and you're $5,000 in the hole. You're going to keep on telling yourself that lie until you finally recognize that it's a self-lie and take responsibility for what's going on. Another one, I need to get lucky here because it's my only opportunity. This has to do with greed. So you're over leveraging on a potential opportunity, and you allow yourself to become very convicted on this trade and the potential success of it. And really what you're telling yourself on trying to make way more than you need to on one trade is that you don't believe that you can make money tomorrow. That was like the entire focal point of all my psychological teachings in Fear, Greed, Concepts when I did the Safe Place Mentorship, when I did those original teachings, it made that curriculum. It was all based on the fact that when it comes to fear and fear of losing, that's why we don't take executions. And when we oversize or when we overstay our welcome, so you crossed your TP, you didn't take partials, you didn't exit the trade, and you want more and more, it's because you believe truly somewhere in you that you're never going to get on the right side of the market again. You believe you're never going to take another winning trade again, or at least that it's going to be a long winter before you do, and so you've got to get it while the getting's good. And if you're operating from a place of that much of a lack of confidence, then you might need a new strategy, or you need to take a break from trading, or just reassess and calm down. Because if you really think that your setups are that unreliable long term, then do some more back testing and figure out if that's true, and then reassess from there. This next one actually has some derogatory slander name calling attached to it. There's a term in the trading space, it's called strategy hopper. You are probably a strategy hopper. 90% or more of traders are. So it's very hard to get a trader to stick with a strategy long term. And that's why it's so rare to find profitable traders, because the only profitable traders really are the ones who don't shift their execution strategies, their trading strategies from week to week. Now, making changes over time, over the course of months or years, totally makes sense if you're working to sharpen your edge, or you find something that's just objectively better, and you spend a lot of time studying it, then that's okay. But I'm talking about the people who are in 4 different groups right now, my own included. They're trying to learn a bunch of different things at a time. They're shifting their mindset from every week they're focusing more on one strategy or one set of concepts than the other, right? And that happens when you tell yourself these lies. 1, I am not the problem, my system is the problem. Most systems, if they're published and they get a lot of traction online, it's because they are not the problem. Most systems, when executed from a perspective of experience and discretion with good psychology, can be profitable. Not mechanically, but with experience. They can be very profitable, most of them. But you tell yourself that the system's the problem when that just doesn't make sense. Why is it working for other people and not you? Another one, I know one day I'm going to find a mechanical strategy that works. I basically just touched on that, but that doesn't exist. Get over it. If you don't want to trade, you need to quit trading. Seriously. And I'm not telling you this because I want you to quit trading. I'm telling you this for your best interest. If you do not want to trade, if you do not want to be a trader, you need to quit trading. That's all I'm going to say about that. Last one, my psychology would be better if I had a more reliable trading strategy. No, it wouldn't, because trading psychology actually has nothing to do with how good the strategy is. Really, it's more based on if you are practicing these good habits that we've been talking about so far. So, if your trading strategy has a 50% win rate with a 2R, you're going to be profitable. If it has a 25% win rate with a 5R, you're going to be profitable, right? If it's got an 80% win rate with less than 1R, you can still be profitable, okay? So if you had a more reliable trading strategy, what does that mean? Does it mean higher R? Does it mean more wins than losses? Does it mean more wins than losses? I mean, what does it really mean for you? It means something different for everybody. And a reliable trading strategy isn't one that wins every trade. It's a trading strategy that makes you money over the course of months and years. Because the more trades that you take, the higher your P&L goes, because you lose a couple, you win a few. You lose a couple, you win a few. That's how it works in this game. And you have to be sharp. And sometimes you're going to have hot weeks where you're just reading the market like a book and it's following your strategy. And then some weeks you're going to be scrolling on Twitter and seeing people take these giant payouts and You've been hitting nothing but losers or small winners all week, and it's just how the game works, right? So it's not about your reliability of your trading strategy. Your psychology needs to improve here and now, and you can't continue to push that responsibility off of yourself by telling yourself that it's related to your strategy rather than your mental capacity. Okay? This one's going to be funny. I wish I could have like a camera to see y'all's faces, because I know that this isn't a lot of people, but if it is you and you're watching this, you've been thinking this entire video, oh man, this must suck for all these traders, trying to learn psychology. They're never going to win. Well, he's not really talking about me. Oh, how did he know? Yes, I'm talking to you. Trying to game prop firms for payouts. And I'm not talking about when you should let your account get liquidated and restart with live accounts versus express funded accounts with Top Step and stuff like that. Like, I'm talking about you're trying to make a system that's mechanical in part, and you think that you're going to outsmart a multi-million-dollar company, tens of millions of dollars coming through these companies, each of them. And you're talking about outsmarting people who have been paid way more than you've ever been paid in your life to intentionally outsmart you. It's not going to happen, okay? Maybe you can find a way. And I'm telling you, because I've tried to do it. I've tried to do it on numerous occasions. I've tried to do it with groups of very smart people, and it just doesn't work, right? Long term, it doesn't work because of what you're going to have to spend and how often it's going to work, and you have to have perfect execution, and then they're going to catch on to you by the time that you get that, and you're not going to make your money. They're going to see that you're gaming them. Okay, so this is just a short little note right here, but here's the lies you tell yourself. I can't win, so I'm going to try to rig the system. If you believe truly that you can't win and you don't want to trade, then quit trading. I am the chosen one. I am Batman, and I can outsmart this company. I just explained that. No, you can't. There are people who are paid so much money. You don't even know how much money they're paid just to set the prop firms up to make you fail. Even if only one account gets payout, I'll be in the green. Yeah, sure, after 20 accounts, and you just made a profit of $100, and now you have to explain to them why you blew every single account, full porting the longs, trying to get the payout, and then they're probably going to hit you with some BS on how your commissions actually make you fail the consistency rule, so you need to take one more trading day and make a couple dollars, and then you're going to lose all your profits that day anyways. If you're not a profitable trader, you're not a profitable trader. That's how it works. And you have to accept that and be okay with it and grow into a profitable trader. But trying to game the prop firms and just, trick the system into giving you a payout by, getting all these funded accounts stacked by using some sort of hedge strategy from the trading game or whatever, and then you're like, oh, let me figure out how I can, if I just long this and long this and long this, eventually one of these accounts will get big enough and then I can take the consistency. It's not going to happen for you, man. It's not going to happen for you. Long term, it's not going to make you the money that you need to make in this space to reward yourself for the time and effort that you put in. You're worth way more than that. So just stop trying that and understand that there is a way to make it out of this successfully. Okay. FOMO, fear of missing out. We touched on this one a little bit earlier. Okay, so let's just start with the lies. A few of them. I would have made $10K today if I took that trade. No, you wouldn't have. You would have taken profit at $1,000, $2,000 maximum. And then your runner probably would have also only gotten another couple $100 because you would have been shitting bricks and you're not used to trading profitably. So when you finally get ahead in the market, everything about your plans of making 10K goes out the window, and you're just focused on securing that money that shows up on your P&L. And so you're not going to make 10K if you took that trade. If I had moved my stop loss, I would have won that trade. That's horrible mentality. If your stop loss was at a point of invalidation, then you should have gotten stopped out. It's as simple as that. Long term, if you continue to move your stop loss because of that one time that you got stopped out and would have won, all of those losses that get bigger and bigger and add up over time and it being larger than they should have been, those are going to add up to more than that one trade that you would have won if you had moved your stop loss. And Finally, I'm just going to hop in here and hope it keeps going up. This one's pretty bad. You've been trying to figure out the market all day and execute your trading model, and then you realize, oh shoot, it looks like this thing might just be, doing one of those crazy super trend days. I'm just going to click buy and then close my phone and set it down and go work or go cook or go play Fortnite or whatever it is, right? I've done it myself many times in the past. That's not part of your trading strategy, right? Today I TP'd I just made a video and I'm going to be posting it soon. I TP'd for 142 points on a long. At the point of recording, I measured and saw that if I had held it, I'd be up another 200 points, right? So that hurts. I could have had one of the biggest marketing opportunities in my entire trading mentorship career. I could have made, over twice as much money as I made on that trade, but who cares, man? Like, I know that I'm profitable because I've proven to myself that I'm profitable over time and time again. Over time, forward testing, back testing, I can see that it's okay if I miss out. So did I hop back in and just, hope that it keeps going up? No. I just let the market run. Today. I was busy, I had things to do, and I wasn't just gonna click the buy button and hope that it kept going. What if it was a fake out? What if it was a fake super trend and we had a massive dump? I would have looked at my phone, and if I didn't have a stop loss, man, I would have lost everything if it had been a fake flip or fake super trend to the upside, right? Or maybe I make a bunch of money and then I learn that lesson and I teach myself like a monkey, like a rat. Okay, all I have to do is press buy and then I'll win. And then I'm going to do it tomorrow. And then I'm going to lose everything on my live account, on my Top Step accounts. I'm going to lose all my funds. Like, you don't want to do that, man. You don't want to do that. You don't want to hop in here and hope it keeps going up, right? You really don't want to do that. What you want to do is you want to learn how to catch those moves in the future. And if there's no way to consistently learn how to catch those moves in the future, then all you got to do is learn how to catch some other smaller moves in the future and profit off of those. You don't have to catch these big super trend days. I'm telling you guys, I know that you see the stuff on my page about catching this 200 point trade, this and that. I have missed out on, oh my God, I've missed out on some stuff, dude. Hey, let me just show you guys this real quick. Look at this for a second, okay? If you go back in my Twitter, you'll see me telling everyone to long at 18,383. And I have a swing account with MFX. Did I long list all-time highs? You take a guess. Let me show you how many points it is. I swear, go look on my Twitter. I told everyone to long at 18,383. If you turn off your B80J, you'll see this line right here. And if I had taken that trade, even just to the 2 hour mark 2, not through the all-time highs, but to this level that I wanted to go to right there, that's 2,400 points. I'm talking about tens and tens of thousands of dollars in one trade, because I did long it, right? Not nearly as far as I could have, and it's okay. Like, if I continue to live in the past there and think about, oh my God, I would have made calculating how much money. I don't even know the specific number. I don't know how much size I would have gone on for. I don't know if I would have taken off too much right here and then regretted and tried to get back in, and then I got back in at the top right here, and then it dumped down, and then I got out of all my contracts, and then I tried to get back in here again, and then I actually exited for a loss, and it pumped up here, and then it started to dump down, and I told myself, well, I need to get in short because I wanted to come back lower so I can get in long again, right? You know what I'm saying? If your psychology is bad, it's just going to be all the way bad. So just get over the fear of missing out and just wait for the next setup, and find something else to do with your time besides just stare at the chart too. If all you can do is stare at the chart, then go to FX replay and go back to 2000 or 2012, whatever, and just do 12 years of backtesting over and over and over again. Seriously, guys, because it's going to be so much more effective than just being a slave to the fear of missing out. Okay, here we have one that kind of ties in multiple of these points together. most of these points together, honestly, trading outside of your plan. So that doesn't just have to do with entering, that has to do with exiting trades, right? This isn't my model, but I'm positive price is going down from here. I've done that a billion times. I think that, like when I did the mentorship, right, in Safe Place, it was the hump, right? It was the idea that we're going to create an invisible zone. And so in creating a visible zone, therefore we must go and travel down to it. So the theory is that if we make a second pullback here, even though we're not in a POI to the left, a zone or an invisible zone, whatever, to the left, I think that it's going to go down and hit this invisible zone and continue up. So instead of just waiting for the damn long, right, and protecting myself, I am looking for the short here. How many of you do that? How many of you think that I just realized this is all the way off on the side, my bad. Okay, here's the hump, right? And I'm thinking that price is gonna go from here to here and then down in here, and then I'm gonna take the long. And that's a great trading setup if it follows your strategy and stuff, but what doesn't follow your strategy is trying to short it down into that spot. It doesn't work to try to short it down into that spot long term over time. That's not your trading setup, right? What if it just, you try to short it down in there and it just comes up? Okay, well, you just lost. Good job. And then you have another opportunity that popped up right here for a long and you missed out on it because you were sulking over your loss on your short. And then you're trying to short it again, hoping, maybe it'll come down even bigger. The more the merrier. I just get a bigger short. No, you won't. Quit telling yourself that. Next point. I went to long from X, so let's say it's 21,000, whatever points, right? I went along from X, so I'm going to short in hopes it goes down from there. That's a bad idea. Wait for it to go down there and give the short opportunity or give the long opportunity. And if it doesn't, right, then you wait for only valid setups for shorts if your bias that day is for the bearish side. You need to be following your bias, you need to be following your plan. So if your plan isn't appearing, don't try to force the market to go towards your point of interest, right? Just chill out and understand that if it doesn't play out today, then there'll be another setup another day that's going to play out for you, and you can stay alive. You can keep your capital and your funding, and you can live to fight another day and be profitable long term. And I'm pretty sure I've seen this setup before on Twitter. Yeah. Okay. Don't put money on something like that, man. If you think you've seen it on Twitter and you want to see if it's accurate or if it's going to work, like, just put it on paper, man. Just put the freaking short long tool on there, right? Like, why put money on that? Why try to get lucky? It's like, even by gambling addict standards, that is just to the next level. I mean, you're talking about someone walking in there and into like blackjack or something and being like, yeah, I saw this one guy that said to always double on whatever this is, and you don't know the circumstances, you don't know the rule, and you're doubling, like you're putting more than just a little bit of money, like you're putting double the money down onto it, right? That's what you guys are doing when you see something on Twitter. You don't learn and master it, and then you put money into it before you do, right? I can't give financial advice. I used to make that mistake. Not really that I gave actual financial advice, but I pushed the limits a little bit when I would tell people, trade paper. So I'm not telling you to trade paper, but I'm telling you that if it was me and I was in a new mentorship, like if you're a premium member watching this, or if you're considering joining, or you're in another mentorship or whatever it is, and you're learning a different strategy and you're learning how to master that strategy and execute it properly, and you are taking it with real money on the table, even if it's profit money that you paid for, that you paid a smaller price for a greater amount of profit capital, paper capital for, like, why? So that you can get lucky, maybe? How many times in a row do you think you're going to get lucky? Do you think you're going to get so lucky that you're going to get this account passed, and then you're going to pay the funding fee, and then you're going to continue to be lucky enough to beat the consistency rule, right? Beat the consistency rule and take a payout? How many times do you have to get lucky in a row using some trading strategy that you happen to see on Twitter? This is not how it works. put time into mastering it and focus on paying yourself after you've put in the time. A lot of you have the mentality of a W-2 worker. You expect that when you put in time on the chart that should equate to money. I've been working for 6 hours on this chart. I need to take $120 at least. That's $20 an hour. First of all, it's a horrible hourly rate. No offense if you're working and you're getting that. As far as like trading and long-term and business ownership goes, once you've mastered a craft after spending years on building a business or mastering a craft like trading or like mortgage brokering for me and trading and just all and videography work, the things that I personally do that I've spent years mastering, you can't pay yourself like this W-2 mentality where it's like, oh, I put in all this time today, I should pay myself. No, the payout comes long term. The payout comes long term whenever you take all that you've learned and you compile it into your own trading plan that fits into, in my opinion, the best skeleton to follow is market structure. And after a year, 2 years, whatever it is, of mastering this craft, of building your business, of getting really good at taking pictures. Like, you don't walk into a store or you don't walk into a school and say, hey, let me take pictures of kids and pay me money for it, right? No, that's freaking weird. You become a professional photographer over the course of years. You take classes, you watch lessons online, you do a bunch of work for free, and then you get hired to go take school photos, and you get paid per child that you take a photo of or whatever, or hourly, and you get it's your business, you get that money, you get the payout, it feels good, and then you think back, okay, well, here's all the hours that I put in, and if I do the math now and calculate it, man, that's not a lot of money. I've only made $5 an hour. When you do all the math, it's like, well, wait until you do another 10 gigs. Wait until you're taking pictures of real estate and they're paying you hundreds of dollars or thousands of dollars, right? And then, it took you an hour to make $500. Oh, okay, I get it now. So now when I divide all that out, now I'm up to about an average of, $8 an hour. And then as it goes on, that's how trading works. That's how you look on growing your profitability. And that isn't to do with like, okay, I get one payout on one account, I'm going to stack and get another 5 accounts. Like that's not what I'm talking about. I'm not saying that's a bad idea. I'm just saying that you shouldn't be focused on that. You should be focused on money. Money's important long term. But in the moment, if you're telling yourself that you deserve a payout because of all the time that you've put in this week, this month, then you're looking at it totally wrong. It has nothing to do with deservedness, being deserving of. It is just to do with when the stars finally align, when you've mastered your craft and you start to make money and you become profitable. Time will heal those wounds of going weeks, months, years without getting paid. When I started as a mortgage broker in 2020, I was the lowest tier. I was just processing and learning, right? Processing files, learning what to do, driving to drop stuff off places, right? I was making nothing. I was making like $500 a week. And it was really hard to live off of that because rent was $1,000 a month. There goes half my money, right? And that was in 2020. I started in August. In January, I got licensed. I worked overtime and I built up a client base. I made great money compared to my age that year. I made way more money than I was making in 2020. And then 2022, after spending all of 2021 working for literally 16 to 18 hours a day, 7 days a week, I had gained a ton of weight. I literally had become an alcoholic. I'm clean for a long time now. But I was so stressed out. I was managing my stress poorly. I was eating poorly. I had no exercise, no life, no social life, no nothing, right? Everything I was doing was work. And the amount of money that I made, if you do the math on it, it was probably not much better than the 2020 year because of how many hours I put in. It was better, but it wasn't much better. 2022 comes around. So that was 2021. 2022 comes around. I cut my workload down to probably, I want to say a fifth. Is that right? I went from working 16 hours a day to about, no, it's an eighth. I went from working about 16 hours a day, 7 days a week, to about 2 hours a day on weekdays. And I made 2.5 times or more as much in 2022 as I did in 2021. So why am I just yapping about that? I'm not trying to flex on anybody. That's why I'm not talking about numbers. I'm just telling you guys percentages, right? That just goes to show you that there's a light at the end of those tunnels if you stay persistent and you do it right. Would there have been a light at the end of the tunnel if I became a sleazebag mortgage broker and was ripping people off and got caught for, and slammed for fraud and charged a bunch of fines and, lost my license? No, the risk, the ROI, the return on investment, would have been bupkis. It would have been negative at that point because I didn't execute properly. I didn't go into the business with the right mentality. So that's why this psychology video is so important, is because if you're sitting here spinning your wheels and you're doing it wrong, right? And that's why mentorship and using structure and things like that, in my opinion, is so important, because if you're doing it wrong for so long, you're not going to turn a profit, right? So you can't just be doing it for a long time wrong and hoping that it's going to go right. If you're gambling for 3 years, people are like, oh, I've been trading for 3 years. I'm just, everyone else, I've been waiting for my payout. I still haven't gotten it. It's like, dude, because you haven't been trading for 3 years. You've been fucking gambling for 3 years, man. And you've been gambling for 3 years. If you're talking to me about which next crypto pump you're going to try to get into, you're a gambling addict. And you're just expanding that gambling addiction here into trading on the NASDAQ or on ES or whatever it is, right? So or crude oil, I don't know what you trade, or gold, whatever you trade and you're watching this, like, you need to trade for years, right? You need to practice good business for years and build those client relationships with trust, build trust in yourself, build trust in your system, build trust in your system and yourself and your own psychology and your long-term success and all those things, and you'll find consistency and you'll get that long-term payout. But if you're just spinning your wheels and you're saying that you have been trading for 2-3 years and you have just been trying to game prop firms the entire time, or you've been trying to make a mechanical strategy and paying all your money into bot development over and over and over again, like, no shame, I've tried it, spent money on bot development, have nothing to show for it, have nothing but loss to show for it. It's just like, it's not gonna translate to that big payout. And so you might think like, well, Magma, I've been working on it for 3 years and you're wrong. Like, it really just has to do with luck. That's what it boils down to. Like, dude, listen to yourself. It has to do with luck. Do I need to say anything else? Like, that's your mentality. So that's why you're not getting the payout, because you're not trading for years, right? If I'm scamming people and I'm not actually originating loans and mortgages for people and taking care of them, I'm not actually doing the work, I'm not practicing good business and being honest with people, then why would I expect that it's going to turn into a more fruitful career for me in 2 years from now? You understand what I'm saying? So if you fix your psychology right now and you come and join my mentorship, or you join another mentorship that has, a profitable trader leading it, I'm not saying you're going to be profitable next month or next week or next year. I'm saying you're going to start your journey of actually trading, and after being a real trader with good practices, with a good system for years, I believe that it is inevitable with good psychology to become profitable and stay profitable long term, only if you meet those contingencies. And you watching this video, looking at me right now, I believe that you can do it. Okay, I believe that anyone can do it if they can overcome this, right? Because the systems out there, they work. I've tested a lot of them. Literally just, and not by itself, I shouldn't even say this, but like just last month, I was looking to sharpen my edge and add another thing to my bag, right? Add something to my repertoire, something I can, use for an additional confluence on top of my triple confluence trades, right? So I started studying fair value gaps, IFVGs, order blocks, all that stuff. And I'm like, man, there is a lot of validity to this stuff. I can see though that when you don't have structure behind it, or you don't have good psychology behind it, it's a freaking mess, right? It's a freaking mess. Everything that you've tried, you back tested it and you've seen how good it can do, and you got so excited, and then you went into the real market and you couldn't execute it that way. Or you told yourself in the backtest session when you were on FX replay that, yeah, it's fine. I won 3, I lost 1, whatever. That's not what happens. You win 3, you lose 1, you fucking quit. You give up on because you lost 1. You turn degenerate because you lost 1. You change your strategy, and you start to just full port because you lost 1. You can't handle losing 1. The problem isn't your strategy. It's not that you lost 1 and won 3 and you're up 2. It's that you can't handle losing that 1. When you can master being okay with not being right about your bias, and the people in the premium mentorship will tell you that I haven't signaled losing trades in at least the past couple of weeks, but I've been giving daily top-down analysis, and half of them I've been thinking like, okay, here's my analysis on why I think we're probably due for some shorts here, but I'm only going to follow market structure and trade my models, and I've been profitable consistently through these all-time highs, even when the market is going crazy. But my analysis has my bias is wrong half the days. I've been not taking trades a lot of these days. Some of these days, like none at all. I've been showing my P&L. Like going in there the other day, last week, show my P&L was $8. And that's because I took a trade I wasn't supposed to. And then I got out when I realized, hey, I'm not supposed to take this trade. That's another thing I forgot to mention. Here's another thing you guys do. You guys get into a trade, and then you realize that you weren't supposed to get into that trade, and then you stay in the trade hoping you get lucky and it wins. And you're telling yourself, if it loses, I wasn't actually supposed to get into the trade, so I can feel okay about it. Stop doing that shit. If you get into a trade and it's genuinely a mistake, stop trying to get lucky. And trading a live account will teach you that lesson very quickly. I did a live, I switched to my live account, started doing it a couple weeks ago, and literally, man, I've accidentally pressed buy or sell on a mini 2 times. And I'll tell you what, I didn't waste a second to close that position. I didn't care if it was green or red. I was terrified. Get the hell out of that trade. That is 10 times the leverage that I wanted to enter in right now. And then I wiped the slate clean. I'm like, shit, I lost $25 for losing 1 point plus some slippage. You live and you learn. But when you're getting into trades by mistake, genuinely, and you're sitting there watching them, that's the same as gambling. That's the same as gambling, because you become aware, what it is that you need to do. You need to exit that trade. You need to stop what you're doing. You need to cut it short. This wasn't a trade you were supposed to be in. You're just hoping that you get lucky because you don't believe in yourself. But just know that you have someone who does believe in you, okay? I don't want to sound corny, but I believe in your capability of doing this. I believe in everyone's capability of doing this. You just master that psychology, master market structure, and find a few trading models that you can rely on. You don't have to trade everything. You don't have to trade every single day. You don't have to trade every single bar, right? Just find your edge and master the psychology. Rewatch this video a couple times and be honest with yourself. So vulnerable. You don't have to tell anybody. You don't have to comment and tell me. I mean, if you want to and you want to express your gratitude, sure, I'm not making fun of people who do that. I love seeing those comments. I love responding, interacting with you guys on that stuff, but you don't have to. You just want to keep it private and no one has to know that I just read you like a book, don't tell anybody. I'm talking to you, Stoic. Anyways, just master your mind and master structure and find a few reliable trading entry models that follow that structure, that that you can cope with, that you can get along with your trading psychology, with your mental capacity. How much are you willing to lose in one trade? How many trades are you willing to take a day? What is the time commitment to taking this many trades on average a day? And then study and master it and forward test without risk on the table and learn lessons. Back test without risk on the table and learn lessons. And profitability will be inevitable for you, okay? Sorry that this video was so long, literally an hour and 5 minutes we're coming up on, so I'm gonna call it here. If I missed anything and didn't touch on it, I'll do a follow-up second video. It's not a big deal. I think that this is plenty to digest. Really, again, please rewatch if you feel like you missed anything, and if you feel like you need some help in psychology or some accountability. We have optional accountability available in the premium mentorship, the Magma Mindset. I can give updated lessons on these all the time. I'm always, giving psychology talks, especially when we have nothing else to talk about, when we're talking about a top-down analysis for the day, or we're talking about, a trade recap on a live stream or something on Tuesday and Thursday afternoons. So if you need help with psychology, or if you need help with a strategy or learning market structure, I'm totally here for that. I am getting paid for my time, and you should expect nothing less for yourself long term from the markets. So yeah, that's pretty much it. I'll see you guys in the next one. Peace out.